Good morning. We're almost ready to go. All right. Let's do it. Is it worth the pain? Is it worth the price? Go play the game tonight. Can you tell me if it's wrong or right? Hello and welcome to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. Yours truly. I go by Blind Run on the internet, and the IRL name is Matthew, and welcome to my YouTube channel if you've also made it over to here, where we stream the show every Monday through Friday, 9:45 a.m. Central to 10:45 a.m. Central, and then posted accordingly to various other platforms, including Odyssey, Rumble, and Spotify, as well as Anchor. So there you go. Today's show, we are going to be talking, of course, about the pump in the cryptocurrency market, specifically revolving around Ethereum as we see it finally cross that $3,000 price mark. Then we're going to be talking about the new Nvidia Hopper GPU, which has been pictured now, and we have some information on the memory modules that are in there. We also have the largest amount of cash available on a CPU pretty much ever from the new AMD EPYC 7003X CPU, which is a data center CPU to be clear. Then we're going to be talking about, like I said, that price move, and a little bit, because it's mining week over at CoinDesk, they're doing all these kind of fun topics. Today they're talking about cryptojacking. If you guys aren't familiar, I used to be a cloud solution specialist. Cryptojacking has been and always will be, I think, for a large part of basically IT firms, an issue that needs to be handled. I thought it'd be an interesting one to talk about. After that, we'll be talking about, of course, the mining profitability for the day. We moved over to two miners. Now, I'm actually not seeing a huge improvement in, of course, earnings over at two miners, but that's okay. We'll talk about it. And then we'll get into just the general profitability as well. Let's get into it right after a word from today's sponsor. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs quickly while earning up to 8% cash back. In addition to the Visa debit card, there are additional fiat options, including wire transfers, to easily receive your profits. Crypto.com also offers additional services, including trading and even staking, to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. Welcome back. Please use the affiliate links down in the description for everything that I have posted down there if you're going to make a purchase, because it helps the companies realize the value of the channel and our community and helps me keep the lights on. Today we're going to be talking about Nvidia H100 Hopper GPU leaks out. Right now, let's get into it. Coming from WCCF Tech, it's a massive monolithic die built on TSMC 5 nanometer process with up to 144 SMs. Video Cards has done it again right on the eve of the Nvidia GTC event. They have leaked the picture of Nvidia's upcoming Hopper H100 GPU in all its glory. We can see a huge monolithic die laying to rest any remaining speculation that Nvidia was going for an MCM approach. I believe, like we talked about yesterday, AMD is going to go the MCM approach, but we don't have necessarily full-on confirmation of that. And as far as this goes, we can count on 144 individual streaming multiprocessors. 6 stacks of HBM memory are also visible, which is actually a visually similar configuration seen in the Intel competitor chip Gaudi 2. I think it's Gaudi maybe. Anyways, terrible name. Although depending on the exact type of HBM used, it could have wildly different specifications. At a bare minimum, we are looking at 48 gigabytes of VRAM, although all the way up to 96 gigabytes and more is possible with HBM3. Nvidia will also be rolling out its standard server-based products. Here's a quick summary. Nvidia will be rolling out a number of products based on the GH100 GPU, such as XXM-based H100 card for DGX mainboard, a DGX H100 station, and even a DGX H100 SuperPod. More importantly, Nvidia is also announcing PCIe-based H100 model at the same time. If the SM to CUDA core ratio is the same as Turing, and that's a big if, there are exactly 64 CUDA cores per SM for a grand total of 9,126 CUDA cores. Assuming a nominal frequency of 2.2 gigahertz, this is at least 40 teraflops of double precision performance. The amount of VRMs present on the PCB also indicate that the card is going to have one heck of a power draw. And I would not count out a TDP between 400 and 500 watts for the higher end variants, considering the leaks about Ada Lovelace, which is a parallel architecture focused on gaming. In any case, this thing is an absolute beast, and we shall see it announced by Nvidia CEO Jensen tomorrow, the man in the black leather jacket. Nvidia's architectures are always based on computer pioneers, and this one appears to be no different. Nvidia's Hopper architecture is based on Grace Hopper, who was one of the pioneers of computer science and one of the first programmers of Harvard Mark I, and the inventor of the first linkers. She also popularized the idea of machine-independent programming languages, which led to the development of COBOL, an early high-level programming language still in use today. She enlisted in the Navy and helped the American war effort during World War II. Oh, buddy, what are we looking at? Probably a lot of hash rate. We'll find out more tomorrow, of course, but I'm super excited. If you take a look at that die there and take a look at obviously the HBM3, that is going to be the big key here for mining. These things could be absolutely insane on basically hash rate to power consumption. Maybe not so much with that 400 to 500 watts, but I'm thinking we might actually crack on a single GPU over 200 mega hash a second, which could be pretty awesome. So hopefully we'll get more information tomorrow. We'll be able to do our hash rate prediction on this GPU as we get more details on the total bandwidth, or the total memory bandwidth, and we'll go from there. Next, we're going to be talking about another exciting release, and that's the AMD EPYC 7003X Milan X CPUs. And this is also coming from WCCF Tech. It'll be the world's first data center chip with 3D V-Cache technology. We do have, of course, don't forget, we have the new 5800X3D, which is the V-Cache model for the consumer line, coming out, I believe, in April. And we will hopefully be seeing one of the best CPUs for mining pretty much every algorithm, outside of maybe like VerisHash and a couple outliers, due to the amount of cache that is available on that new 5800X, provided, of course, the miners can actually take advantage of the 3D V-Cache technology. AMD has officially launched the world's first data center chips with 3D V-Cache technology, the EPYC 7003X Milan X CPU family. AMD EPYC Milan X server CPU lineup will consist of 4 processors based on the 7nm Zen 3 core architecture. These include the EPYC 777 3X, which features 64 cores and 128 threads. The 7573 features 32 cores and 128 threads. And the EPYC 7473 features 24 cores and 48 threads, while the EPYC 7373 features 16 cores and 32 threads. This needs to be corrected here. I believe it's 32 cores and 64 threads on the 7573. I think there's a little typo there. Here's a picture of the die, and you see the little fun chiplets on basically the EPYC style CPU here. Building upon our momentum in the data center, as well as our history of industry first, 3rd gen AMD EPYC processors with AMD 3D V-Cache technology showcase our leadership design and packaging technology, enabling us to offer the industry's first workload-tailored server processor with 3D die stacking technology, said Dan McNamara. No, I botched that. Who's the, when I shouldn't, because he's the Senior Vice President and General Manager of Service Business Unit at AMD. Our latest processors with AMD 3D V-Cache technology provide breakthrough performance for mission-critical technical computing workloads, leading to better designed products and faster time to market. Customers' increased adoption of data-rich applications required a new approach to data center infrastructure. Micron and AMD share a vision of delivering full capability of leading DDR5 memory to high-performance data center platforms, said Raj Hazra, Senior Vice President and General Manager of the Compute and Networking Business Unit at Micron. Our deep collaboration with AMD includes readying AMD platforms for Micron's latest DDR5 solutions, as well as bringing 3rd gen AMD EPYC processors with AMD 3D V-Cache technology into our own data centers, where we already see up to a 40% in performance improvement over 3rd gen AMD EPYC processors without AMD 3D V-Cache on select EDA workloads. The flagship EPYC 773X will rock 64 cores, 128 threads, and feature a maximum TDP of 280 watts. The clock speeds will be maintained at 2.2 gigahertz base and a 3.5 gigahertz boost, while the cache amount will drive up to an insane 768 megabytes. This includes the standard 256 megabytes of L3 cache that the chip features. So essentially, we are looking at 512 megabytes coming from the stacked L3 SRAM, which means that each Zen 3 complex, or the CCD, will feature 64 megabytes of L3 cache. That's an insane 3 times increase over the existing EPYC Milan CPUs. In terms of pricing, the EPYC 773X cost $8,800 US, which is $1,090 US higher than the MSRP of EPYC 7763, making it 12% more expensive than its predecessor. The second model is the EPYC 7573, which features 32 cores and 64 threads with a 280 watt TDP. The base clock is maintained at 2.8 gigahertz and the boost clock is rated at up to 3.6 gigahertz. The total cache is 768 megabytes for this SKU too. Now, interestingly, you don't need to have 8 CCDs to reach 32 cores, as that can be achieved with 4 CCD SKU. 2, but considering that you need double the amount of stacked cache to reach 768 megabytes, that doesn't look like a very economical option for AMD, and hence even the lower core count SKUs might be featuring the full 8 CCD chips. The 7573X costs $5,590 US, which is 15% more expensive than the $4,860 US pricing of the EPYC 75F3. With that said, we have the EPYC 7473, which is a 24 core and 48 thread variant with 2.8 gigahertz base and 3.7 gigahertz boost clock and a TDP of 240 watts, while the 16 core and 32 thread EPYC 7373X is configured at 240 watt TDP with a base clock of 3 gigahertz and 3.8 gigahertz boost clock and 768 megabytes of cache. Both chips cost $3,900 US and $4,185 respectively, which makes them $34 and $267 or 267% more expensive than their non-X counterparts. All right, boys. Well, obviously these are extremely expensive and you wouldn't purchase them for mining because even though we are getting massive amounts of cash and they will, in theory, be the best mining CPUs on the planet as far as for anything from Raptorium to Monero, they are going to be extremely cost prohibitive. And funny enough, we do have a topic to talk about here because as these get deployed into data centers, there is going to obviously be a lot of people trying to mine on them. And there is something called cryptojacking, which we're going to talk about as part of the CoinDesk Mining Week. And let's get into it as more of an opinion, not an opinion piece, just an educational piece, I suppose. And what is cryptojacking? How to protect yourself against crypto mining malware. While most crypto hacks involve stealing private keys belonging to a crypto wallet and emptying it, cryptojacking involves the infecting of a device with malware to gain control over it. Here's how you can protect yourself. Crypto hacks and scams come in many shapes. Some hackers directly break into wallets and steal money. Others promise love to cheat. Others love to cheat you out of your coins, and some are so sneaky you rarely even notice your device has been compromised. Cryptojacking falls into the latter category. I don't know about you guys, but when my computer starts taking up a bunch of CPU resources or something like that, I get suspicious immediately and I'm like, what's going on here? What is this application doing this? 9 times out of 10 it's just Brave browser, right? Or Chrome. But let's continue on. I don't feel like it's that sneaky. Cryptojacking is a type of cyber attack in which the hackers exploit a device computing power without the owner's authorization and use it to mine cryptocurrency. It became a widespread problem during the 2017 crypto boom as Bitcoin and other cryptocurrencies price skyrocketed, making crypto mining a highly profitable business. At one point, cryptojacking was the 6th most common malware globally, according to a report by Checkpoint Software, a Tel Aviv, Israel-based security firm. Now, the other part about this that's a little hard to actually get hard data on this, hard numbers on this, is that you do get a lot of false flags with crypto miners that are installed on just people's everyday machines that they actually want on there, right? That's why, like, when we talk about downloading miners, we're very specific about make sure you get it from the GitHub, because no matter what, it's gonna get flagged as a virus. And because of that, they could include malware along with the miner, other malware outside of just the mining software, which is considered malware, and then you have a problem. And depending on how the reporting is coming or where they're getting the numbers from, right, like Windows antivirus or whatever is pre-installed on a lot of these computers and so on, some of it could be just legitimate, so it kind of pumps those numbers up a little bit more than they actually might be, just to be clear. But lately, cryptojacking is having a renaissance. Google cybersecurity action team wrote in a report that 86% of all the compromised Google Cloud accounts were harnessed to mine cryptocurrencies. All right, so cool. What are they talking about here? And this is where this is how we have segued over from this CPU here, is a lot of times when we were seeing it, like at my old job or whatnot, it was essentially a whole bunch of people trying to mine Monero on basically server infrastructure, right? Now they may get in probably through like a Windows VM or something along those lines, or even like, a Linux VM, or get in through a Linux VM, maybe not have full access to the entirety of that infrastructure, but enough to actually just kind of mine along. And the brilliance behind that for the Cryptojacker in general is that people don't always monitor those systems as closely that they have running in cloud services like Google, like AWS, like Azure, quite as heavily as they would if they're like doing, messing around on their personal PC. So you have like a lot of basically available resources that are running around on a lot of different virtual machines across a ton of different cloud services. And even if you're just using a little bit of them, you're good to go. In a lot of cases too, they will make sure that they add in some sort of like CPU limiter that limits the miner from just pegging the CPU to 100%, which makes it even harder to find, especially if it's widespread across an organization. It's not just individuals that are targeted. Companies and public utilities are falling victim to cryptojacking too. For example, Tesla was hit by cryptojacking malware that infected the automaker's cloud and used the processing power to mine crypto in the background. In early 2018, UK government website and more than 4,000 others worldwide were exploited by cryptojacking viruses. What is cryptojacking? Think about cryptojacking like a parasite that sucks a computer's energy in secret. It's delivered in the form of malicious software that infects your device in order to use it for cryptocurrency mining. The target can be any device, a computer, a smartphone, even cloud servers. The latter is called cloudjacking. The motive, unsurprisingly, is to make money. When a device is infected with cryptojacking malware, it takes control of the device's computing power and channels a part of it to mine certain cryptocurrencies. Then it sends any mined coins to the hacker's wallet. There was a time when websites experimented with mining crypto using their visitors' computers for extra revenue. This is called browser mining, and it used a simple web browser plugin that mines coins while you were on the website. This was called CoinHive. You can still deploy it today, I believe. And for the most part, it works, but not that great. It's still completely possible to do that. And there were quite a few different websites that experimented with this as an alternate way to monetize the websites outside of ad revenue. Because right now, the virus that we deal with is ads, right? And I'm very familiar with that because we run a YouTube channel. Like, oh no, are we still loading? I just looked over here. Let me make sure we're still streaming. All right, hold on. All right, it looks like we're good. Okay, we're going to continue on here. We just had some technical difficulties. Let me drop the rate down a little bit so that we don't have as many issues. All right, cool. So, where were we? Because we lost complete track of that in general. But that was just another way to monetize. We were talking, I think, about browser hijacking, right? So, and then we were talking about right now the virus is ads, right? As a YouTuber, I'm fully aware that basically like the entire monetization of the channel is based on ad revenue. And if we go anywhere on the internet, we're dealing with ads and so on. There are some things that you can do to like reduce the amount of ads that get served across your home network. Pi-hole is a great option. Linus Tech Tips has talked about it, as well as Craft Computing is one of my favorite for pretty much all that type of content. Definitely check out Craft Computing if you guys want to get into that sort of thing. Some heralded browser mining as the new business model to monetize web traffic, just like we were talking about. Reputable digital news sites such as Salon and less reputable but more popular site, the Pirate Bay, experimented with authorized cryptojacking as a complementary income stream. Even the United Nations Children's Fund, UNICEF, used it in 2018 to harness supporters' computers to raise donations via cryptocurrency mining. For a while, there was an entire service built on this. CoinHive, which we just talked about, provided lines of code that let web pages use their visitors' devices to mine Monero, a privacy-focused cryptocurrency. Unsurprisingly, it did not take much time before it was used improperly. Web pages started to abuse the service to make extra revenue from visitors without their consent. In fact, cryptojacking became so widespread that CoinHive came under significant scrutiny and was eventually forced to shut down in 2019. You can still technically get the source code and do it. I wouldn't recommend it, unless you just want to test it at home on whatever, right? The reason cryptojacking is so prevalent is that the entry barrier is low and very profitable for hackers. Hackers only need a few lines of JavaScript code to sneak into a device that will later run the mining malware surreptitiously in the background. Hackers may bait the user into clicking on a phishing email link to upload the malicious code onto their device. Another possibility is to infect a website with cryptojacking command line embedded in the HTML code that runs the program automatically once the user opens a specific web page. Some versions of cryptojacking malware are even capable of passing the virus onto other devices and infecting entire servers. In some instances, this can allow hackers to benefit from the huge computing resources of large server farms practically for free. Most of the time, cryptojacking does not involve the theft or corruption of any personal data. Its main purpose is to gain access to your device's computing power. Additionally, they are incentivized to stay under the radar. The longer the malware runs undetected on a computer, the more revenue hackers receive from mining coins. Cryptojacking only exists with cryptocurrencies that use the proof-of-work consensus protocol. This subset of coins uses computational power to verify transactions and secure the network. And by doing that, they are rewarded with coins. According to Interpol, the most notorious cryptocurrency that hackers mine is Monero, because of the high level of anonymity it offers, making transactions difficult to trace. False. 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 The reason why Monero is the number one is not because of the privacy features. It's primarily due to the fact that it's CPU mineable, and you cannot guarantee that every computer you hack has a GPU in it, but you can confirm that every single computer you basically get into is going to have a CPU. That's why you would want to do Monero. Otherwise, you're wasting a whole bunch of time trying to find all the gamers that have left their computers open with 8 gigabytes of VRAM on their GPU or whatever, over 4 gigabytes. It's a waste of time, right? And then if you're trying to get a data center, like a server, to actually have a GPU, good luck. You're going to have to, I guess you could go in and try to hit like every single render farm, and maybe like if you know the companies well, sure. But the reason is because there's more CPUs in existence, and Monero mines on a CPU. It's really that basic. Bitcoin, the largest proof-of-work cryptocurrency, was once popular among cryptojackers, but the mining industry has grown so competitive with specialized mining machines and large warehouses that it makes little sense to try to mine it using other people's laptops. How can you detect cryptojacking? The goal of cryptojacking is to hide in the background for as long as possible to mine more cryptocurrency. Malware is designed to use just as much power as it needs, and it goes largely unnoticed. However, there are certain signs that your computer has been infected by cryptojacking malware. Here are some of them. High CPU usage, devices slower and noisier, overheating, battery dies faster, and unexpected increases in electricity bills. It does not necessarily mean that your device mines crypto if you experience any of the signs above. Open Task Manager on your PC or Activity Monitor on a Mac and check what the programs are using your device's computing power for. The best is to run a system check using antivirus software. Good luck there. Most cybersecurity programs are able to recognize, detect, and quarantine cryptojacking malware, including, and they give you a list of different antiviruses. For people who operate websites, you can hunt for suspicious lines of HTML code or turn to programs that scan websites for malicious code. Some examples for the latter include Malcure and Securi. Once again, there are better ways on the network level that you can prevent this, and I would definitely go watch Craft Computing. He has some good information on that. In the end, cryptojacking malware is not that much different from any other type of malware. The Cybersecurity Infrastructure Agency, CISA, published a long list of tips to protect your device with technical details. But here are the basics to avoid getting infected. It tells you to do antivirus, says use ad blockers. You can use ad blockers not even at the browser level. You could do it, like I said, like Pi-hole is a great option. Avoid websites that are notorious for running cryptojacking scripts. You have to look those up. Disable JavaScript in your browser. This isn't necessarily always a bad thing to do. Protect server parks with cybersecurity systems. Server parks? What are server parks? This is a new term to me. We need to go do some research on server parks, boys. Anyways, a brief overview of cryptojacking. Some decent tips on how you can prevent it and what you'd be looking for. I think really the biggest problem for at least that I've ever noticed with cryptojacking is, of course, server infrastructure, data centers, that sort of thing, and basically trying to prevent it over on that side of things. And then, of course, with these new beautiful CPUs from AMD, be as tempting as ever to get on Micro Center's infrastructure, or not Micro Center, Micron's infrastructure, and see what these babies can do. See what they can do. Do not do that. It's a joke. Cryptojacking is bad. I've never done it, even though I have deployed CoinHive via WordPress because, I don't know, it seemed cool. But I never made the site public. Cool. You guys ready? You guys ready? Ethereum right now sitting at over $3,000, over 3,000 US dollars. Pretty amazing. For the first time in a long time, we have, of course, Bitcoin over 42,000. A lot of people are saying we're about to break out. We're about to break out. We're about to moon. Now, historically, we wouldn't be mooning in March, 2 years into the super cycle. We would be going down. So am I positive that this is a signal that we are going to moon? No, I'm not at all. Not to be pessimistic, but I just, I'd rather be a little bit more grounded in my assumptions surrounding the price movements that are coming in. But everybody else, they're saying it. They're saying we're going to moon. So let's try to stay positive. ETH price hits 3K as major crypto fund adds over $110 million of Ethereum to Lido's staking pool, or Lido's staking pool. Now, if you guys are considering staking, you need to understand a couple things about Ethereum that's kind of, I think, a little tricky for people. There are a couple different ways to stake. One would be that you get 32 ETH in and of itself, you self-custody that, and you spin up your own staking, and then you have that full 32 investment. You control your private keys. That's the safest way to do it. The unfortunate part about that right now is it's going to cost you 32 ETH, which is quite expensive, especially at $3,000 a pop. So your other option is to participate in some form of staking, usually through a centralized service, and you can do that at a lower level. What's the problem there? Well, you're not going to have control of your private keys, therefore you do risk, of course, the company that you're staking with, etc., going under, being malicious, or something along those lines. The other thing about staking Ethereum right now, like we talked about before, the big issue, the big red flag, is post-merge, you will not immediately be able to unstake your Ethereum. So if price goes into a free fall on Ethereum due to some sort of, unforeseen, at this point, probably not going to happen, but could happen, kind of mess up on the merge, you aren't going to be able to pull out and liquidate that Ethereum, because right now they've already confirmed that immediately after you will not be able to. Now, they use the term immediately after, but I don't know if it's like a Patriot Act type thing where this is a temporary situation that never goes away, or what, right? So how long that time post merge that you're not going to be able to unstake, I'm not clear on. I'd be a little cautious personally, but these guys aren't. So there you go. Later, the hedge fund manager reportedly purchased more than $22,500,000 worth of ETH tokens from FTX and Deribit. So that's why the price is getting driven up. So a one-time large whale purchase does not mean that the price is going to remain at the high point that it currently is at. This isn't indicative of like what I would say would be mass adoption or anything. This is just a single whale player coming in and basically driving that price over 3,000 US dollars. Are they incentivized to try to maintain that price over as a whale? Yes. Do they actually have the capability of doing that with, you know, the amount of purchase that they had here? What do they have left to keep continuing to keep that price up there? I don't really know. To me, this doesn't mean huge bull run because, like I said, it appears to be one investment, right? Ethereum's native token Ether rose above 3,000 on March 22nd as fresh data suggests Three Arrows Capital staked at least $110 million worth of ETH into Lido's liquidity pools. The Singapore-based hedge fund manager provided liquidity worth 36,401 ETH to Lido's Curve ST ETH pool. Using a third-party Ether wallet, data from Etherscan shows, as a result, it became eligible to receive at least 36,401 stacked Ether tokens from Lido. Or Lido or Lido, I don't really know, I'll be honest. To ensure low slippage when unstaking those tokens for real, ETH plus staking reward. Almost an hour later, another Ether address. So this is good. We have two now in here, marked with the word fund, sent 6,993 ETH worth 21.12 million US dollars to the Curve staked ETH pool, hinting that Three Arrows Capital was adding more liquidity to the Lido's coffers. If correct, the fund may have already staked more than 130 million US dollars worth of Ether on March 22nd. Participating in ETH 2.0, the Three Arrows Capital massive Ether inflow into Lido staking pools came ahead of the launch of Ethereum's new validation system in the summer of 2022. Ethereum will switch its network protocol from energy-intensive proof of work to proof of stake, which lets users validate transactions and adds blocks to the Ethereum blockchain by staking 32 ETH or its multiples for at least 1 year to earn annual yields. But only 8% of the current ETH supply has been staked into ETH 2.0 contracts since its introduction in December of 2020. Understanding that average Ether users are reluctant to lock 32 ETH, about $100,000 at today's price for a year, that has created opportunities for liquidity mining providers like Lido or Lido. Notably, Lido allows users to lock any amount of Ether to participate in running the ETH 2.0 chain without lockups. As a result, it now represents more than 80% of the Ethereum liquidity mining space, holding nearly $8.25 billion US dollars worth of ETH in its pools at today's prices. Hence, Three Arrows Capital's looks intent to becoming a validator on the Ethereum network via a less risky alternative like a liquidity staking pool. Meanwhile, the fund appears to have also been accumulating more Ether. Three Arrows Capital addresses received about 22.5 million US dollars worth of Ethereum tokens from wallets associated with crypto's exchanges FTX and Deribit on March 22nd, less than an hour after it staked 36,401 ETH into Lido's pool. It wasn't clear whether Three Arrows purchased the coins anew or merely withdrew them from or for holding or future further staking. But in either case, the firm contributed to what appears like a constant depletion of Ether reserves across the crypto exchanges, considered by many ETH traders as a bullish signal. Yeah, but they can always refill that. Now, if it was not going into Lido's pool, I would be more bullish than going into Lido's pool. Why is that? Because if you have to actually lock it up for a long term that's going to go past the merge, right? Then I would be more keen on saying, okay, that makes sense. These guys are super confident. It's locked away. It's not going to make its way back to exchanges. But just by the fact of the platform they chose here, where they do have the ability to pull it out kind of at any time, it does, to me, feel like just in general that it's not as bullish as it may first appear, right? It's still bullish, just not as bullish as it would first appear, right? Nonetheless, PrimeXBT, an independent market analyst, highlighted 3,000 US dollars as a key inflection zone for ETH price, noting that only flipping above it decisively could have Ether IA move towards 3,500 US dollars. You know, guys, I'll just tell you right now, not financial advice, but if it goes over 3,000 and it needs to go up more, it's going to go to 3,100, okay? All right, so there you go. We'll wrap it up right there. First Mover also does cover this in the crypto markets. The big market moves as cryptocurrencies ignore a hawkish tone from the Federal Reserve Chair Jerome Powell as Goldman's first over-the-counter Bitcoin option trade revives hopes of stronger mainstream participation in digital asset markets. So if you guys weren't aware, essentially Goldman Sachs is hopping in the cryptocurrency game on the Bitcoin side, and that is another reason why we're seeing bullish markets today. So that's two big movers, one on the Bitcoin side, one on the Ethereum side. Liquid staking giant Lido's LDO token doubles in less than a month. Dash's technical chart shows a bullish breakout. So that's pretty much it. Those are the market moves. We're at 42,786 US dollars on Bitcoin and $3,019 on Ethereum. Will XRP ever hit $1? We're going to skip that one for today. All right, so that pretty much wraps it up. We're looking really good on pricing. We'll kind of see, is that translating into mining? I'm not fully seeing or fully realizing any translation into mining. To me, it looks like we're seeing increases in difficulty on the networks as well. So maybe there's some mining investment going on as well. We'll kind of talk about that. But we're going to talk about that after we talk about, which one is this? Yes. Here is some financing options, alternate financing options for Bitcoin miners. And it is essentially working with Compass Mining. If you guys haven't heard of Compass Mining, I believe Bits has some interviews and stuff over there with them as well. I've tried to talk to them. I haven't really locked anything down. Timing just hasn't gotten us into place. But trading platform Pipe launches alternative financing solution for Bitcoin miners. The company worked with Compass Mining for several months before launching the product. Pipe, the trading platform and technology company that was valued at $2 billion US dollars last year, is launching a new alternative financing product for Bitcoin mining hardware and hosting companies with recurring revenue. The program, called Mine Now, Pay Later, will work as an alternative to traditional means of financing such as equity or debt, which are expensive for the companies and their shareholders. Quote, "We've created a trading platform that allows companies to sell recurring revenue stream generating products and services to institutional investors," end quote. Harry Hurst, the co-founder and CEO of Pipe, said in an interview with CoinDesk. The buyers of these contracts are institutional investors, including banks, hedge funds, pension funds, and family offices that have a fixed income mandate and are looking for recurring payout generating assets, Hurst said. The company signs contracts with its customers for a recurring payment schedule and then puts those contracts into Pipe's platform for trading, where investors will buy the contracts. In turn, the transaction becomes an instant source of funding for the company, which it can use to fund its growth without diluting the shareholders by offering equity or locking in an expensive debt facility. Quote, the financing solution is a little bit like hardware financing, but much more efficient because it's on a trading platform and diversified, end quote, Hurst explained. Pipe earns a commission on trades that get executed through its platform. The commission is up to 1% and varies depending on the trading volume, Hurst said. Pipe has been working for several months with Bitcoin mining service provider Compass Mining, which is the first company to broadly offer this new form of financing. The funding alternative comes as cryptocurrency and broader markets have retreated from their peaks last year, dampening euphoria among investors. In such a market, access to capital via traditional means has become harder and more expensive for Bitcoin mining companies. Quote, together with Pipe, we are accelerating the growth of Bitcoin mining by democratizing access to the critical financing options that traditional banking institutions have ignored. Kind of an interesting solution here for it. Now, would this be something I'd want to participate in as a miner? And no, this makes me super nervous, right? I don't know exactly how it works. I'll have to do some more research or whatnot, but it definitely makes me more nervous than I would, I don't want to owe anybody anything really. Plus, like, if it starts tanking, what happens then? You're just out, bro. You're just out. But here's the Pipe platform. Nothing really necessarily on the contracts. It's an interesting, okay, so frictionless financing, get the capital you need when you need it without offering discounts or disrupting your customers' experiences. If the market was down, it seems like it would be a good idea, right? Like a bear market, but I don't know about now. Let me know what you guys think in the comment section below, as well as, of course, live chat. So if you look at the market right now, just once again, looking at all the beautiful green, we have Bitcoin up 5%, Ethereum up 4%. Let's look at the biggest changes. We have IOTX, surprisingly, I haven't seen this one around in a while, at 25.86% on the pump. Bitcoin Cash at 13% on the pump for the last 24 hours. And EOS at 12%. Quantum over here at 12%, kind of starts going down there. Helium's up 10% as well. And Ethereum Classic, like we were talking about last night, the profitability on Ethereum Classic that we started seeing yesterday is looking pretty intense. Probably some of it due to this 10% pump in 24 hours, up 66%. Now, I have not found necessarily exactly why Ethereum Classic is pumped, but I am looking at doing some research on that for tomorrow's episode. Let's talk about mining profitability. We are on 2 miners. Oh no, what happened? We need to make that night theme. That looks so much better. So why do we move to 2 miners? Well, we moved to 2 miners because it's there's way too much anxiety on smaller pools. I'm just going to put it that way. It's nothing against Crazy Pool. When they find the blocks, when Crazy Pool finds the blocks, it by far pays better than any other pool. But a lot of times when it's not finding the blocks or the luck is really bad, I've had a couple days on there where we made under $100 in revenue, and that's not going to work for me. I need a little bit more steady income, which means I need to be on a larger pool. Unfortunately, the other larger pool options that we have a plethora of different issues, whether that's ethically or just functionally. For example, if I was going to use Mining Pool Hub, my problem with that is that they do require an email registration. Now, while it is only email, and I probably shouldn't worry about it because I am merge mining on Poolin right now, where it does require an email and a phone number as well, I try to avoid any KYC if possible, and that is currently where I'm at. I'm also still looking at getting off of Poolin. I've just been there. We did the video. That's where my Doge miners are. It is what it is. But the other issues that we have is Ethermine and FlexPool, or the other pools that we have. Both of those pools have made the decision to block Russian IPs. I do not support that. You can watch one of my other videos discussing cryptocurrency and sanctions and all of that from a fundamentals perspective. We won't dive too deep into it for now, but that's the reasoning. So the next largest pool that offers everything that I could want, as well as alternate payouts, which is another big issue here, is 2 miners. So we're on 2 miners right now. We're sitting around 5.23 gigahash, 5.18 gigahash on the average. 14 workers online. 2 more workers are going to be going online here today. And we are seeing an estimated daily profit of 0.07 Ethereum at 214 US dollars. And currently, over the past 24 hours, we did $199.72. If we compared that to Crazy Pool, I think it's not as good. Here we go. We'll show you. For the last month, the last full day mining, we had 273. But you can see here, no, sorry, last day. But you can see the big differences, right? We had a $273 day, and then we had a $113 day. Anyways, I was getting nervous, so we popped off. So it is what it is right now. I bet if we go to blocks, they're just finding crazy blocks. Not so much. So what you're looking for here is like, see the 350% luck, 320% luck. If we went here. It has some that are like 635% luck. So wherever I move, I guess is going to be bad. But there are a total amount of blocks are much higher. So the bad luck isn't as bad. So it's kind of the reason why profitability is fine. The other thing about this, like I said, is that you have essentially the ability to change your payout method. It works different than your payout methods on like Crazy Pool or Ethermine, where like your settings here is going to essentially be setting what network chain you're on. Whereas with 2 miners, you basically create an ETH wallet, but put a Bitcoin or a Nano address in there. I'm going to be covering, I think, these different payout methods for you guys. Hopefully this week is what my plan is. So stay tuned for that. We're also still mining Flux on Miner Pool with 400 solutions a second. And that is netting us under 6 coins now a day. So the profitability on Flux has gone down as far as like the total amount of Flux that we're mining. But, you know, it is what it is. Then we're also still mining Veriscoin with 6 CPUs at this time. And that's primarily just due to the fact that I'm playing with this algorithm for soak coins. So there you go. All right, let's take a look at profitability for the RTX 3090. Out of nowhere comes Zero, which is Equihash Zero at $8.21 a day. It says recent difficulty spike 0. We always find new things, don't we? So what's Zero? Z Snarks, Equihash Zero, decentralized payments, blah, blah, blah. Everything seems about the same. They do have master nodes. About. No. Wrapped Zero. So they have a BEP20 token. So you can swap it on the Binance Smart Chain on PancakeSwap. Interesting. So liquidation's good. Let's see. What exchanges do you got? PancakeSwap, which we already talked about. InstaSwap, which is basically what Flux utilizes in their wallet. We got SafeTrade, Swift Blockchain, and Crex24. Really, your best liquidation option is going to be InstaSwap or PancakeSwap. And there was a huge rise in price on March 21st, 2022. And then another huge price pump. So it's gone from literally from what? 1 penny, almost 2 pennies to 11 cents. Huge gains on Zero. But this isn't, is this Cero No, because Cero is, now I got to search. What is Zero, boys? Sounds super familiar. You can mine it on Miner Pool, Supernova, Zerg Pool. But look at this. Alrighty. Well, I have my project for today. Let me get this bookmarked. Yeah, because Sarah's still its thing. It's its own thing, right? No, that's 11 cents. So it is Sarah. Right? What is it? This says Cero.cash. It's different because that's the privacy coin. I don't know. I don't know what this is. I am following it, so it must be an old one. All right. Be careful when you go to mine new coins like that, because obviously the difficulty spike is here because everybody's moving over to it. So while it looks like it's twice as profitable, it may not be. If we're looking at Ethereum, which is kind of how we're judging the mining market, we're only at $3.93 a day on the 3090. Impressively now, Ethereum Classic is getting very, very close to Ethereum at $3.24 a day after power. And then from there, we kind of got to go down. Let's correct our flux here just in case, because as you can see, the Zell hash on Nice Hash is profitable at $2.75 a day after power. But if you were to mine it directly, it's $2.50 a day after power. Their usual suspects in here, Conflex at $2.50 a day after power. And then we got Rio, $2.28 a day after power. Ergo at $2.23 a day after power. Ravencoin at $1.99 a day after power. There you go. Let's take a look at, let's get rid of these real quick. See if there's any changes going on. Huge spike in price, but we're still sitting solid at 214 exahash a second. No super increase in difficulty or hash rate on the Bitcoin network today compared to yesterday. We are still at right at 1 petahash a second on Ethereum. No significant increase on Ethereum. Let's see if this Zero protocol is on here. Zero is on here because what we want to look at is right there. At 9 a.m., the hash rate on Zero spiked significantly from 3 kilosolutions a second to 11 kilosolutions a second. I'd be really, really careful on this one. Don't jump all your rigs over. Clearly, that's what everybody else is doing. Probably not large enough cap to really support it. And the other thing is here, obviously, all the hash rates on minerpool.org. So spread your hash rate out if you're going to do it. But play that chance if you want. I don't think I'm going to play that chance personally. Flux is now under 2 megasolutions a second at 1.95 megasolutions a second. I wonder if a lot of people are moving from Flux to Zero. That's be kind of interesting. We do still have the spikes on the solo pools going on. Pretty expected, but not as large of spikes as there used to be. Take a look at Ergo. We got to look at Ethereum Classic too. We have a decrease of hash rate on Ergo down to 13.62 terahash a second. Ethereum Classic has a significant pump in hash rate that started on the 20th, and due to the profitability we saw yesterday, really started spiking on the 21st and continues to go up today. There is a corresponding spike already in difficulty on Ethereum Classic. Finally, we have Ravencoin, 3.51 terahash a second. That's actually down from yesterday when we checked. However, it's kind of expected as of right now, and the difficulty is declining as well. Mining pool profitability on Ethereum for the past 90 days. Crazy pool in first, mining pool hub in second, flex pool in third. Last 60 days, mining pool hub in first, flex pool in second, crazy pool in third. Last 30 days, mining pool hub in first, nano pool in second, flex pool in third. Last 21 days, ZET in first, mining pool hub in second, 2 miners in third. Last 14 days, mining pool hub in first, 2 miners in second, nano pool in third. Last 7 days, ZET in first, mining pool hub in second, nano pool in third. Last 3 days, crazy pool in first, nano pool in second, mining pool hub in third. And for the last day, nano pool in first, crazy pool in second, mining pool hub in third. And then if we're looking at profitability on ASIC miners, they are struggling compared to the rest of the market. Gold Shell KD6 still in first, but really hasn't gone up at all at 115 US dollars a day. KD5 coming in behind that at 78.29 a day. The ET hash ASIC actually took over second place, the Silicon A11 at 84.85 a day. Taking a look at the Antminer S19 Pro, we're looking at $17.54 a day, which is up a couple dollars than what it was at, but it is what it is. Taking a look at the sales, there's not a ton of sales on BT miners right now. It looks like actually the S19 Pro went back up in price from 9,500 to 9,900 now. Can't remember exactly. And then you have the Antminer S17 for $45.50 at 73 terahash a second. The Gold Shell KD box at 5,300, and the Litecoin miner from Gold Shell, the X5 at 2,000. We still need ASIC miners to really come down in price, in my humble opinion. Let's get into questions and answers for the day. Super chats are never required, always super appreciated. It helps keep the lights on, and it is the first I read because it highlights them really nicely, so that's why we read them first. If you have another question, do @SonOfATech, and that's how I can read it easily. We'll do about 12 minutes here, and then I'll get going. So, Daniel Ring says, any updates on the Koi? Yeah, so the Koi miner, they shut down China, that big city in China. So I'm like a week out. I really don't know what's going to happen right now. But nothing's even shipped to BT miners. Matt Wall says, as SonOfATech, am I saving money by having 2 miners convert and pay me out in Bitcoin, or should I have them pay me in ETH? It really depends on like what your plan is, but what we would see would be, it would depend on like how you're doing it, because like technically it all comes down to taxes. Talk to a CPA. That's all I can really say. There are ways in which, like, if you got paid out in ETH and you swapped it when it's lower, then you file a loss, so you don't really have to worry about it as much. But yeah. Gabe Denny says, at SonOfATech, recently had a bunch of cards, 3070s and 3060 Ti's, just start to drop, even though they had been running less than a year, never above 72C. Yeah, because it has nothing to do with the core temperature. It never does. Never does. The core temperature doesn't matter. Irrelevant. Don't look at that number. It doesn't matter. It could be running at 40C. It's irrelevant. It's the thermal pads. It's your memory temperatures. That's what you need to be looking at. they're dropping off. You should be checking memory temperatures. Scott Schultz says, at Son of a Tech, you read the Time article on Vitalik. Dude said he's worried about crypto dystopia, apparently. I have not finished the article. No, I've gotten a lot of the headlines, etc. And I can't say I disagree with him. So, there you go. At least from that perspective. Like that overview. I keep telling you guys, we're going to say it again. We're going to say it again. Okay? We're going to say it again. We are at the beginning stages of a war between centralization and decentralization. And how this plays out is either going to turn into a crazy dystopia or basically a utopia. Not quite a utopia, but much better than the dystopia. And so from that perspective, man, you better get your principles in line, know what you believe, know your fundamentals. We don't have to agree on everything, because one of my fundamentals is to not squelch anybody else's speech and to have discussion. So that's not necessarily within my principles, right? But you need to know what they are so that you can discuss them with people and move forward. It's important. Earl Larson says, are you on Instagram? I do have an Instagram account. I haven't logged into it in about 3 years. Lil Gim says, at Son of a Tech, I pay 15, what do they call pennies in euro? That's really cheap, a kilowatt hour, because I work on the grid. Should I go on ASICs or just stay GPU? You can do whatever you want and you're golden, bro. That's what it sounds like to me. Total Bouillon says, at Son of a Tech, my orders just started shipping from China, was sitting for a week. Good luck. Cool. I'll call them and follow up today. Wuchin says, at Son of a Tech, how is SoakCoin doing? We have the GitHub spun up. I have surfaced 2 of the servers for development, as well as like gotten all the, we had our first dev team meeting yesterday. You know, it was 30 minutes. We got it in, we locked it down. We have our project kind of starting to get lined out. I got the infrastructure completed yesterday. Oh, I have 2 other guys that are helping me out. Dane, who's helped out a ton in the past with mining pools and so on. And a new guy that I don't know if he wants to be doxxed or anything, so I won't say his name right now. But if he does later, we'll talk about him. He's done some Raven coin pools and stuff like that. So we have 2 pretty good devs. And then me just sitting here like, meh, but we're good. Yeah. And then we're going to kind of just, the goal is to move forward with that, get it deployed, get it out. And then right now it's going to be a lot of documentation. There's little things on the coin that we're going into that I got to get like sorted so that when it does get surfaced, and then we'll be hopefully doing the testnet at some point soon. But yeah. Texas Ace says, at Son of a Tech, I'm building a DIY Rosewell server case to fit in my rack. Are there any chances you would make to them to improve them? I found a ton of surplus $5 Delta fans keeping things cool. Yeah, as long as you got those Delta fans. Now, what I've noticed is if you fill out the entire rig, so you get the 80 millimeter Delta fans in the back and you get the 140 in the front, the fan, I guess the fan extension with the 1 Molex that the cases come with isn't enough to power all the Delta fans at 100%. So you need an external fan controller for that. Max Barbell says, ask Son of a Tech, when do you recommend to change the thermals on a 5700 XT above 80F, or is 80 okay? 80 would be perfectly fine on the memory. Right? Yeah, be perfectly fine on the memory. Well, an 80C, I think you would be saying, right? 80 Fahrenheit would be extremely cool. Mustafa VK says, ask Son of a Tech, what about PCIe multipliers? Is it reliable to use, let's say, 4 GPUs on that thing? I'm trying to make a 2060 rig, but my motherboard price around here is insane. I've seen some people have, you know, good experiences with it and some people not. I lean toward, that one's going to be a mileage may vary thing. It's going to depend on the motherboard. It's going to depend on the actual expansion card that you get. There's too many variables to really tell you to go one way or the other. In general, I would say it's less reliable. That's the best I could do there. Oh, great one says, Tech, do you have any GDDR6X memory GPUs? Yes, I have a ton of them. Texas Ace says, Tech, I saw the Harbor Freight fans you got for the farm the other day. Might look at Home Depot for the same price. They have some better fans. I have one from Best Buy, but I went to Best Buy and Lowe's. So we were good though. It's actually hot today and the farm's running at full hash. So just those fans. And then we've been going out every day. We'll probably be going out today as well again, working on some stuff. Remember, if you have questions, Patel, you have to tag at Son of a Tech or I can't read it. I just caught it there when you said, LOL, asked the question twice, but still got ignored. Hey ho. Hey ho, follow the rules, bro. I am me says, at Son of a Tech, my helium has been pretty crappy so far. How's your doing? Terrible. Terrible. Don't do it. I don't even want to review it. I get so upset when I open my helium wallet and just see this little thing ticking along at like 2 cents a day, bro. It hurts. I don't like it. I don't like helium at all. I don't get it. All right. Bologna? Is it? No. Bola? Bola? Bro, come on. I can't pronounce that. I tried though. Says at Son of a Tech. Hello, well, sum it up. I'm new to rig builds and recently bought 3 1060s, but when I connected them with the risers, I get blue screens. Directly to motherboard works fine. Sum it up. I'm new to rig builds and recently bought 3 1060s, but when I connected them with the risers, I get blue screens directly to the motherboard. Works fine. You're going to have to go through troubleshooting. I have an entire guide on troubleshooting mining rigs up on the channel. Definitely check it out. We can't troubleshoot that in a live chat. Sorry, it's just not going to be something we can do. There's too many variables, man. Dan San says, Ask Son of a Tech, do you know a site to find which other coins to mine with GPU and CPU? For what to mine does not have them all. Maybe start researching other coins to mine after ETH 2.0. Well, you have a lot of different tools, but for the most part, you have MinerStat and what to mine. You can get an idea there. If you're looking at spec mining, you're going to have to start digging into Discords, digging into GitHubs, bouncing around, seeing what people are working on, and go from that perspective. You know what I mean? These websites are only going to be able to pull coins that are on exchanges that are supported by the APIs, right? So, even if there could be a coin that's just only listed on decentralized exchanges that are never going to pull over to there. Son of a Tech coin will be one of those, right? Or Soap coin, for example. Andre Morris says, Ask Son of a Tech, do you think have a GPU mining rig in California is a bad idea for its highest cost of electricity? From my perspective right now, from what I've seen in California, it is very rough to maintain a mining rig. And I don't know that I would do it. I would move out of California like everybody else is doing. Look, if you want to be a miner, I do not think that living there is a good idea, right? Panzer, $5 says, just say hello. Thank you for the 5, not dollars, euros. But thank you, good sir. Patel says, I did tag you, bro. What would you suggest for cooling, thermal pads or copper shims? I don't recommend the copper for anybody. We've talked about that before. The problem with the copper is that you put pressure on the PCB and it adds weight to that card. Your longevity, especially in a mining situation, just does not seem necessarily worth it. However, it does work the best, but I'm not confident I just wouldn't recommend that for everybody, right? Now, as far as like thermal pads, you can get thermal pads that are going to have better thermal dissipation. you need to take a look at them. It's usually like 6.8K or whatever it is, and try to get the higher ones. And then you can grab all of those from, of course, the like Amazon or whatever, and you can go through the stats. Thermal Grizzly would be a high rated one, so on. The other thing though, if we're actually talking about on the core, if you were going to go immersion cooling, for example, you'd need to get rid of all the paste. If I went immersion cooling, personally, I'd strip the card all the way down to where it was bare with no cooler on it. But if you are going to run a cooler on it, you're going to have like the heatsink on the GPU in the submersion. You can't use thermal paste because it's going to wash away. So you need to use the little graphite pads, essentially. Daniel D says, if you had to choose one card to pick for the new miner post ETH building first rig, if you had to choose, guys, I need better English. I'm trying. If you had to choose one card to pick for a new miner post ETH for building first rig, I'm gonna assume you're asking what the card would be that I would want to have after ETH. It would be the 2080 Ti. John Bronson says, at Son of a Tech, I have an MNDT helium miner for 6 months and a Bobcat 300 miner for a month or so as well. The Bobcat makes 2 to 3 times the reward on a low transmission scale. That's my understanding as well. Augustin Cortez says, at Son of a Tech, do you know any good buy-sell groups? I have a lot of GPUs and ASICs that I'm still looking for a scam-free miner marketplace. No, I do not, unfortunately. Sorry. Snarks Domain, thanks for the 10 Canadian dollars. Be sure to spend that on Canadian whiskey. Backdoor Slugs 9 says, did you try upgrading your antenna and cable for your HNT? Yes, we have a $250 antenna with a 10-foot cable mounted to the side of the house. I did mount it in the attic at first, which didn't work, so I mounted it outside, and to my chagrin, it really didn't help at all anyways. Rad C. Puman says, at Son of a Tech, off topic, yesterday you had QuakeCon on your closing screen at the end of the stream yesterday. You played Quake Champions. I played real Quake, not Champions. What are you on about? I have played Quake Champions, yes. It's not my favorite Quake, but I have played that. But I go to QuakeCon because that's where you would go to play video games with friends. You know what I mean? Anything and everything says, that's how attack. The farm seems so dusty. Do you think it will shorten the life of your GPUs? Not the GPUs, but the fans it will. Edmund Banner says, that's how attack. Thoughts on zero mining? I would not hop onto it right now because everybody's hopping onto it and there is a significant difficulty increase. We already talked about in today's stream. You can rewind it later. If you had to choose one card to pick for a new mine, all right, we already talked about that one. Shivadi Shot says, any reason why you don't use Hivepool? Because the profitability is always low. Always. Anything and everything says, that's not a tech. Do you think the co-location to a clean data center, like the recent video you posted for 9 cents a kilowatt hour, is a good choice? It depends on what your power cost is. 9 cents a kilowatt hour sounds like a lot, though. Sean J says, that's not a tech. Would ETH going to proof of stake be kind of the opposite of decentralization? Proof of work in general, in theory, would be less centralized, but there's we've talked about it before. There's too much nuance to that question and too much detail that we have to get into to really get into that right now. 3 Mil says, that's not a tech. Hi, son. How many? Come on, guys. How many times do you think ETH Classic got after? I don't even know how to answer. I can't even read it, bro. I'm sorry. I tried. Snarks Domain says, as of a tech. Oops, I forgot to write the message there. I recommended using the TGPP10 thermal putty when replacing stock pads. There you go. Andre Morris says, Asava Tech, what do you think? Do you think Alephium was a fake crypto coin? I don't think it was fake. I mean, like, I don't know. I haven't even looked into it, though. I never mind it. The only one I tried was Ton. AZ Miner says, "Ask Son of a Tech, have you done anything with the 3080 12 gigabyte? No, I have never bought one." Bola says, "Ask Son of a Tech, thank you. We'll look forward to troubleshooting guide if it helps. The error is video TDR failure." Yeah, I mean, there's definitely something going on with your video cards, but you just need to start testing one by one. I really don't understand some of the questions with the harder English. I'm trying, though. Vesselin says, "Ask Have a Tech, hey, love the stream. Is £600 or $800 good for a brand new 3060 Ti Founders Edition? I'm in the EU. $800 US right now feels steep to me. That's how I feel about it. If it's the 3060 Ti if it was a Founders Edition where it still had the unlockability of the 470 driver, that's even still a stretch." Aggregarker Visual says, "Ask Tech, do you think we will see a similar situation with Flux nodes like we saw with Chia and Helium? As more come online, it will tank profitability." As far as Flux nodes, I haven't looked into it necessarily that in depth as far as like how many nodes come online, all that sort of thing. But it's not similar to Chia and Helium in the aspect of like the way it functions. And I think the profitability won't affect the mining portion of it. Right, it's not like Chia has like a GPU miner and a hard drive plotting miner or whatever, farming. It's not like Helium has, Helium does, I guess. Yeah, so Helium has the staking portion. But, as with everything, like we just talked about with Zero Coin today, like whenever a whole bunch of people get onto it, it's not when you want to be getting into it. You want to wait until the network kind of steadies out and you're able to see, right? If you can. Patel says, "Ask Tech, thanks for the help. India will get 46 degrees, I assume C, in the midsummer. We'll get some good ass thermal pads. Would you mind if I send some thermal pads to you?" I have some in my, I think in my box right now already for thermal pads. Snarks Domain says, "Ask Tech, I'll be making a video later today of swapping stock pads to putty on the 3080 FE. Cool, Snarks. You guys can go follow him if you want to check that out." Sean J says, "Ask Tech, do you think other networks coins will be able to handle the huge merge from ETH?" It's really hard to tell. Obviously, there has to be a ton of price discovery. Do I think the price discovery will happen? Yes, I do think the price discovery will happen. On what coins, it's hard to tell. Where the miners move, it's hard to tell. But I think I think that for sure there is going to be price discovery, and it will fix it out. Panzer says, "I'm happy now not to get a Helium miner." I would be too. I wouldn't use one. Dillsbury Flowboy, haha, says, "That's time of attack. People have to look at utility bill you may be getting. 9 cents a kilowatt hour, but that is just the supply charge. Delivery charge can be 2 times your bill." Yes, you do have to look at delivery charge, but he's talking about a hosting solution. So, the hosting solutions right now, you're not getting charged by the power company. What you're getting charged by is the hoster, right? So the hosting facility. And usually in Dallas, Texas right now, there's some hosting facilities that are between 8 and 9 cents a kilowatt hour, all in on that. Okay. So that's an all-in cost for you to pay them to host your machine. So they've wrapped that all into their personal deal, right? So that was what he was referencing. Losing with Larry said, "Outside of the tech, been solo mining ETC, made twice what I would have with pool mining ETH." That's great. I tried it for a while, for 3 days, and I made less. It is what it is, my man. We tried with the whole farm too. Trinity Black says, "Outside of tech, with the current situation of ETH proof of stake, is it smarter in your opinion to invest in normal computing mining hardware or go with riserless?" I don't know how normal computer mining hardware or riserless would affect ETH and proof of stake. Hype Tempo says, that sound of a tech. Do you have any Vegas 56? Nope. No, sir, I do not. Full Metal Potato, nice name, my man, says, that sound of a tech. I got to drop 4K euro on a solar for any more GPUs. 6K kilowatt DIY install grid tied. Power costs gone insane here in the UK. Hope you get sorted with your heat and those fans. Thanks, man. And good luck on the solar. Yeah, the UK power cost is insane. Anything and everything says, that sound of a tech. I have 3 helium miners with exterior antennas and down to $8 a day from $50 a day. I would not invest any more in this one. Poorly planned, too many hotspots being deployed, sell your devices. It's not just too many hotspots being deployed. It's they are also messing with the monetary policy and reducing the rewards of the miners themselves on the back end. So they've redone their monetary policy as well. And it's once again, once these companies get big heads, and that's the problem too, consider these things like Helium and Ethereum companies, because once these devs for them get big heads, they're like, cut the miner out immediately. That's what they start doing. Every time. Every time. It sucks. Oh, Great One says, that son of a tech, have you ever got a GPU repaired third party? Got 2 right 580s giving me an issue. Suspect driver sometimes, but I think it might be at the component level. No, I've never done that. I do know that Bitsby Trippin is starting a kind of repair facility. Maybe you could go check his Twitter out. I don't know. I don't think it's ready yet, though. Andre Morris says, that son of a tech, thanks for today's show and all your answers for sure, man. Sean says, that's not a tech. Come on, let's get into it. So ETH proof of stake centralized or not is the Ethereum clickbait video after all. No, I can't do it right now. I also got to go soon. Daniel says, that's not a tech. What do you think about Iceton pool hack? I really didn't look at it, to be honest. Should I stay in the same pool or change to another one? It's up to you. You know, I'm not sticking too close to like the devs that are working on all that stuff. Ice mining obviously was the first one to work with Team Red Miner, so we used it. I'm not currently mining Ton. Part of the problem with that project, right, is it's only for profitability. So I'm not even beyond the profitability portion of it for the mining. I was never really interested in the project itself, if that makes sense. So yeah. Ala Nash says, have you checked out Gemlink? No, I have not. Dan Sands says, do you set your overclocks to max hash with no more than 110 memtemp, or do you run them for efficiency? I usually do max hash because my power cost is low. Aggregator Visual says, that's not a text. The rewards are shared between nodes. The more nodes that come on, you have to wait for you to turn to collect the rewards. There are more therefore more nodes longer between block rewards you. All right, this is getting rough, boys. We're just gonna grab a couple more. Is Elden Ring worth buying? Yes, it's fun. Well, if you like From Software games, if you've never played a Dark Souls, no, it won't be fun. You'll hate it, and then you'll give it a negative review because you don't understand it. So be careful. Crypto in Tech says, that's time of tech, soak coin to the moon. Yeah, to the moon. All right, boys, I'm going to call it. Thanks for watching. Hit the like, comment, subscribe down below. And we'll have more content today. Dedicated content. I'm trying to do more. If you guys haven't noticed, trying to do more of the farm content because I know you guys enjoy it. So, you know, it is what it is. Thanks for the live stream support today. Over 300 viewers. Hit that like button. Like. We have 151 likes, 335 viewers. So if you guys did enjoy it, please hit that like because that would be amazing. Don't forget, This show goes live on Spotify. For those listening on Spotify, we live stream it on YouTube every Monday through Friday, 9:45 a.m. Central to 10:45 a.m. Central. For those that are interested, I'm also getting into just kind of streaming when I play games. I haven't been playing a lot of games for the past year. However, I have been recently really enjoying Elden Ring, and so I'm streaming that over on twitch.tv/blindrun. You can follow me on Twitter at Son of a Tech for whenever I go live on whatever platform and whatever I'm doing at any time. We're also on TikTok, but I don't recommend installing TikTok on your phone. I currently have it on a burner phone, but if you were silly enough to install that on your main phone and you utilize that application that is basically Chinese spyware, you can go follow Son of a Tech on TikTok. Thanks for watching. I'll see you next Tuesday.